So that was a little intense. The funniest part was the pro forma that y'all were fucking around with.
Mm-hmm.
Like, y'all had a good time with it. It's kind of hard to take a pro forma because it's going to be a flipping company. It's going to hold rentals, and trying to figure out what percentage of flips versus rentals. So historically, we've sold 70% of everything we've bought, so we've only held on to 30%. So that's how we projected this thing out. And then historically, our flips have done 37%. So that was a little intense.
Well, it was also hard to calculate because, like, from 2018, growth-wise, it was like 300% for the first 3 years. And then, like, a drastic cutoff. And it's still a high, like, 27 was the last one. It's like, that seems more like a realistic number, you know, but it's like...
I mean, it was very difficult. Like doing a pro forma in that manner, because
it's like I'm not saying we can't do 300% again. It's like I don't want to cut ourselves short, but also got to be.
Well, I was like, I just kept telling Jacob, I was like, just put it at 12 and move on.
Yeah.
Like, but y'all are being really, y'all are getting really down in the weeds. I'm
We're
like,
trying
this
to back
thing
into a number.
Yeah, trying to back into a number historically how our businesses ran, and it's ran very well, and so. Factoring in everything, it was pretty wild.
Plus, with growth comes expense growth, and
yeah, it's very hard, very hard to project that. Spoon wasn't involved with that part of it, not the calculations. And then even y'all, I don't know what, kept getting it kicked back. And I'm like, just put it at 12, call it a day. Just we don't like it's going to do good. We don't know how good it's going to do. It's going to do phenomenal.
I feel like if you sell yourself short and end up doing a whole lot better, no one's going to be mad at you.
Yeah.
Well, and the next one's going to be a whole lot easier to predict.
No, none of them are easy to predict. That's the whole thing. That's why you don't have a crystal ball. You can,
Well.
you know, historically we were selling 70% and hold on to 30%. I'll bet you that number's not. I'll bet you it's 50-50 at
Or
best.
it's flipped.
Or it's flipped.
I bet it's flipped.
So, I mean, but in these 90-day markets, I mean, stuff is still selling. So it's like, you know, one of the things we are going to have to do is give it inventory from the jump. So we're having a meeting tomorrow to look at properties that we have. So a really good example is our Wortham apartment complex. Our Wortham apartment complex probably has what, $50,000-$60,000 worth of deferred maintenance. Like that, if you could stroke a check, you could put 50 or 60 into it
right now.
And it has equity wise, it has probably $400,000 worth of equity, maybe $500,000 worth of equity in tomorrow's market. But in today's market, a legit $400,000 worth of equity. But it's not seasoned. So let's say it starts eating air conditioners tomorrow. It's got 10 air conditioners and they're all old as shit. So it starts eating air conditioners. It's just 4,000. All of a sudden you've got $40,000 worth of air conditioners and $10,000 worth of outside work that you want to do to it. It would not be good on D8 holdings, you know, right now to have to start eating air conditioners. It would affect the cash flow. You sell that thing to the fund at basis, let it assume the loan that is on it. The fund has plenty of cash reserves. It's going to be holding back $300,000. So if it starts needing that deferred maintenance, or if you just didn't want to deal with it and could take it out right at the beginning, and then it holds that asset, and in 3 years, better interest rate market comes, boom, liquidate it. By then, rents have gone from, which we underwrote this at $600, we got $800, so we already out-kicked our coverage there. But let's say we get to $850, $875 on rent the next 5 years. And
I think that's the thing too. It's like 5 years. That's a lot of time for rents to go up.
yeah. So, I mean, that thing could be one that would be better suited for the fund because it has the cash reserves to operate it, and it would juice. I mean, it's just like, you know, I mean, giving it, and since we're not necessarily bringing money to the fund, bringing that equity into it, you know, giving that deal to the fund at basis, could be our capital contribution for the fund. That's the way I look at it. Now, I'm not an attorney. This ain't legal advice. I don't even know if that's a legal move. We're going to have to run that through all the proper channels, but definitely a deal that we're looking at putting into the fund. We're gonna have a meeting tomorrow, look over all of our rent rolls, see which rental properties we have now and what we have on our board currently. That because the day that, I mean, we're gonna have to deploy $4.5 million worth of capital.
You started out with a lot of cash flow in real estate
Yeah,
at a discount or with built-in equity.
yeah. So trying to deploy that in 90 days is going to probably be the biggest challenge. Getting our hands on the money, getting the investors in will be the first challenge, but deploying it within 90 days is going to be very, very tough.